If you've already put down a check for Dunearn House and you just want someone to tell you well done, this video is not for you. You can stop here. I spent 15 years in high frequency trading, and before any trade, we asked one question before everything else. Is this a good product? The question was, who is buying this from me when I exit? Today I'm asking that question about Dunearn House, and the answer is not the same for everyone watching. Here's my position right at the start so you don't have to sit through an hour to get it. Dunearn House is a well-built project at a fair entry price. If you're buying it to live in, near the schools you want, it makes sense. If you're buying a big 3 or 4 bedroom, the trade is defensible. But if you're buying a small unit purely for investment, hoping the Turf City story does the work for you, I think you're taking the weak side of this trade. Stay with me and I'll show you the numbers behind 3 of these statements. Quick background so you know where I'm coming from. I use to backtest strategies for a living, so I'm wired to look at what actually happens before I believe any story. First, what are you actually paying to enter? Quick introduction for those who haven't been following this one. Dunearn House is the first private condo in the Bukit Timah Turf City rejuvenation, sitting right on Dunearn Road, directly across from Royal Green and about 5 to 6 minutes walk to 6th Avenue MRT on the downtown line. The developer is a serious consortium, Fraser's Property, together with Sekisui House from Japan and CSC Land. They took the site at the GLS tender in June 2025 with a top bid of $491.5 million. Which works up to about $1,410 PSF PPR. So remember that number, it matters later. The site itself is about 145,000 square feet, which is mid-size. Enough for the essentials. Pool, tennis, function rooms, but nothing sprawling. On it, they've built roughly 380 units, 99-year leasehold from 2 bedrooms up to 4 bedrooms plus study across a regular collection and a more premium series. So what are you paying? 2 bedrooms for 1.475 million, that's around 2,799 PSF. 3 bedrooms from about 2.6 million at around 2,978 PSF. 4 bedrooms at about 3.59 million at just about 3,000 PSF. The weekend preview pulled about 5,900 visitors. Sales start this Saturday, 25th of July. So the demand on day one is not the question. Day one demand never is. In trading, anyone can get filled on entry. The trade is decided on the exit. So let's backtest this street. Not a brochure, the actual money people made. 2 recent launches sit right around this site. Royal Green Freehold launched 2019. 4th Avenue Residences 99 years, also 2019. These are the closest things in a historical test of the exact trade you're being offered. Royal Green's resale exits average around $114,000 of profit per unit. The single best unit made about $285. 4th Avenue did better, around $213,000 average. Best unit around $471. Now, is 6 figures of profit good enough? For context, in a good Singapore new launch cycle, people expect $250,000 and up per unit. In this street, with all its pedigree, with freehold status at Royal Green, it under-delivered. That's the track record you're buying into, and that's strike 1. Strike 2 is more interesting, and this is the part most buyers miss. Look at which units made money here. 2 bedders topped out around $123,000. 3 bedrooms about $285,000. The big floor plates at 4th Avenue, $471,000. The pattern is one directional. In Bukit Timah, space gets paid and small units wait. Why? Think about who lives here. Established families, multi-generational households, people with deeper pockets who are used to space. There's no natural queue of outsiders fighting to move into the area the way they do for East Coast, Rivervale or Thomson. So when you sell a small unit here, your buyer pool is thin. And here's the uncomfortable part. Dunearn House unit mix lean, small and efficient. 527 square feet for 2 bedrooms. Very well designed genuinely. But you're bringing a product built for one buyer profile into a neighborhood that historically pays for the opposite. Now on the flip side on why someone would buy into Dunearn House is that your entry basis. In 2018, 4th Avenue site sold for 1,540 PSF PPR. In 2025, the Dunearn House site went for 1,410. Same street, 8 years later, 8.4% cheaper land. That happened because the GFA harmonization rules in 2022 made developers bid more cautiously and it reset the base. So in trading terms, you're actually entering the same position at a better basis than the people who bought here in 2018 and 2019. And land prices have already started inching back up since. Part of why earlier projects underperform is simply because they overpaid on entry. You're not making the same mistake. Reason 2, this is the first mover in Turf City. An entire township is coming up around this site. Schools, amenities, and eventually later launches that will eventually be priced off higher land costs. The next plots here are widely expected to transact meaningfully higher. And that gives you a price cushion that even though it may not guarantee you a buyer, you can feel at ease that you already have a price floor. Reason 3, big units. The area is genuinely starved of new large floor plates. When 4th Avenue launched, the 4 bedrooms were the first thing swept up. if any part of this project matches what Bukit Timah money actually wants, it's the 3 and 4 bedrooms. So how do you reconcile the real upside and the real downside? The same way we did on the trading desk. You ignore the story and you ask, who is my exit buyer and what's my exit liquidity like? Specifically from year 5 to 8. If you're living to buy here, your exit buyer question barely matters. You're consuming the asset. The schools, the MRT, the new township, all of it is yours to enjoy. It makes sense. So go get a good stack and don't overthink it. If you're buying a big 3 or 4 bedroom, your exit buyer is the Bukit Timah family that has always paid for space and has almost new supply to choose from. Thin supply, proven demand, and it's very defensible. If you're choosing a small unit for a pure investment, your exit buyer is someone who doesn't live there yet. So what does that mean? In an area where units that are smaller have historically been slower and least profitable, you are not wrong that Turf City will transform. You're just betting on when the demand arrives. And transformation timelines in Singapore sometimes run long. I've seen this move in trading. Being right on the story and wrong on the timing looks exactly like being wrong. It's the same reason I don't chase penny stocks. I want the strong stock that consistently outperforms, not the one that needs a perfect story to work out. So my verdict? Segmented, because a single verdict for every buyer is how bad advice is made. So own stay, yes, the entry basis is fair. The location is genuinely good and you'll be living through the upside of the township as it builds out. Investor, big units acceptable trade, supply is on your side. Just size the position properly and be ready to hold 7 years or more. For investors, buying small units, I think I'll pass. You'll probably still exit in the green because your land basis is protected. But this is not why you want to lock up about $1.5 million for a decade. Opportunity cost is a real cost, and there are stronger trades on the board right now. If you're deciding on Dunearn House this week, don't decide on a YouTube video, mine included. Every one of these verdicts changes with your holding power, your current property, and your CPF position. WhatsApp me at 9786-4104 and I'll run your specific numbers before Saturday, and I'll tell you honestly if the answer is no. That's the whole point. If this was useful, follow for the next launch review. Same framework every time. Entry, backtest, and exit.